Good morning and welcome to the early bird and welcome to the weekend. And we're looking at the Dow Jones here on a daily chart. I don't have last night's bar in on this just yet, but I want to talk you through the dilemma that we're facing here, because the market can break either way, and we need to understand that. At least I can sort of burden the responsibility with you guys. So this is what we were originally looking at. We were originally looking at possible waves to the upside here. And with that, we're looking at a 5-wave structure here as such. Now, there was a couple of ways to look at all of this. There was, in one way, there was up for wave 1 and back for wave 2. And then we'll be looking for a long third wave coming all the way up here, like sort of powering on through up here. That's still a possibility, but we'll just put that one on the back burner for a second. The other possibility, that's the two possibilities that are in the near term, this situation here where, yes, we are looking for 5 waves up through here. This wave here, because this wave here would be looking at this as wave 4 here, because this would be wave 1, wave 2, wave 3, wave 4. Now wave 4 here would produce wave 5 here. The situation with this, however, is that the wave 3 here cannot be the shortest wave in the sequence. So one of the other ones would have to be shorter than wave 3 here, so that would have to make wave 5 here the shortest. So we could look at that coming into 13,000 there. Yeah, so that's one possible structure for this, because we'd been calling this a 4th wave here. And even though today has come down sort of just below, or sort of close to the old low here, just above that. So this can be a wave 4, and we'd be looking for, if that was the case, we'd be looking for a small 5 waves up like that. And that would actually suit the Asian markets, including us, on the local market here. So this is one situation we're looking at the moment. That's one of them in the bigger picture. Now, also in the bigger picture as well, if this failed, then technically it would be this high here that that would be looking at. So if the market came through this old high here, then we could call this in as a top here. We could probably lift this realistically up 50 points to the 500 level here, which is a minor trading level. So a breach of that would help us call this in as a possible top here. But what it does do, though, is it makes this pattern here not right, because you don't normally have a 3-wave structure up like that and finishing like that. So this is probably the scenario through here, but and this is a wave 4 here. But we also have to, on the smaller scale, we have to look at this particular structure in here at the moment as being bearish as well, because the internal structure for this being bearish is certainly predominant at the moment. So it could certainly break lower, and we need to be prepared for that. So we just need to point out that below 12,500, the minor trading level, then we can call this in as a top. But while the market's above that, we would have to look at this being to the upside, and that would sort of help with the Dow Jones, with the other Asian markets, which we can look at. So if this did push up through here, and we'll explore this internal structure to the downside here, like we have been doing, but I'll do that in a minute. But this push up here would help us with the Asian markets, because when we look at the Asian markets, if we look at the Shanghai to start with here, which is, say, the China market, we were looking at this coming down in 5 waves through here. And then we were looking for a 3-wave structure to the upside. So we'll be looking for a structure like this to move to the upside because of this structure to the downside. And once we've got that there, we'd see another 5 come in like this. And then we would push up from there. So that's like that. So that's what we're looking for, some sort of excuse to push this to the upside here. Now this pattern here is very much like, to bring it back closer to home here, is very much like BHP. So when we look at BHP here, we can see the relevance of that in terms of this pattern here. So you can see it's got the same sort of pattern to the downside here. Also looking at 5 waves in terms of 1, 2, 3, 4, and 5. And then we're looking for some excuse to push us to the upside through here, going back up to the 61.8%. So that's kind of what we're looking at there. And when we bring this into the XJO as well, the cash market here, then what we were looking for here is the same, but slightly sort of different. Excuse me, I just got to get this into line here. So what we're looking for here, or have been looking for, is the 61.8 retracement level, roughly in here. So realistically, we're still in here. And I was thinking that we would have this as an A and a B and a C wave into here, and but I'm a bit concerned about that now. So I'm thinking that we're actually lining up more so with the Shanghai and the Shenzhen and so forth, in that we'll actually have 5 waves down. So from here we would have this 5-wave structure like this here. So we've got a little bit more to come down through here over the next day or so, and then push up from there, if that's going to be the case here. Like with the other markets, we would get this 3-wave structure, so, and then a 5-wave structure to the downside here, like this here. So that's what I was kind of thinking. Now, this is all on the bullish side. So we're looking at Dow Jones on the bullish side. We were looking at the China market, or the Asian markets, including ourselves, finding a low within the 61.8 retracement level here and pushing up from there. So that's all still on the cards. But we also need to look at the situation that that if we're wrong, then these markets can push down quite quickly from here. So that's what we sort of need to look at. And when we're looking at that sort of situation here, then these will just drift straight down to the downside. So when we look at the Dow Jones in this situation here, we have been counting it in both ways here. So in terms of a bullish point up, we would see this market come down a little bit down through here on the Monday or Tuesday, and then we would see it from these lows here push up from there, and all the markets would go with it. So that's the one scenario. The other scenario is how we've been counting this through here, is that be down for wave 1 here, back for wave 2 to here of 1 degree, of minor degree, then we're coming down for wave 1 again to here, in 5 waves down here. We've been counting those 5 waves down here, and then we were looking for a counter trend to move back up for wave 2, yeah, and then we're looking at this coming down through here. So basically it's working itself into a 3rd wave to the downside, in terms of down for 1, back for 2, down for 1, back for 2, then down for 1, back for 2. So when we look at this situation in here, I think I might have this on the 5-minute chart. Right, so on the 5-minute chart here, we'd be looking at 1, 2, 3, 4, and 5 down to this sort of area here to get 5 waves down. So we would get 5 waves down through to here, and then we would get 3 waves back up, and then 5 down again. So coming back to the 30-minute chart here, is we would have we've come down for wave 1 here in 5 waves. Yep. So then we'll have the retracement back up, and then we're having down for 1 again, and back for 2 again, and then down strongly. So it's got the perfect setup for a strong move to the downside. So this move from here down to here and back up again and then down again would be a bit like what we've seen here already, but just 1 degree smaller. So in essence, this move down to here would be something like this move to here. Okay, so then we'd still see something like this and back up. So down here and back up, failing probably at resistance up here, or even lower than that. Could even be lower than that again, but somewhere in here then roll over here. So essentially looking at this pattern here, seeing this unfold in this area here. So we're at the sort of gateway of a strong move to the downside, or we can find support here in the larger pattern, which would suit the larger daily pattern and weekly pattern to the upside, finding support here and moving up. So there is quite a dilemma here, and I don't have any answers for it. So it's just tricky. I thought we would actually have this sorted out by now, but it's not the case, and it could take up to another week to sort out, so which is a little unfortunate, but hey, what can you do? So that's what we're up against, and that's what we'll be talking about during the week ahead as well. So it's tricky business. We're at a tricky juncture, and it needs to play out. So pretty much on the internal structure from May here, this can be a corrective pattern right up until here, or it can be a setup to the downside, and we just don't have any answers for that. So now the bigger daily picture that we've been looking at would suggest that we would be pushing back up to 13,000 from here, and that would likely take place with the next low coming in, which would be the Monday or the Tuesday, and would push up from there, which would suit the Asian markets. However, we need to look at the both sides of it here. So we don't have a trend, and it can jump either way, and that's it. So there's the confusion, and we just leaving that sort of with you, really. So it's once again, it's choppy. Once we came into this situation here, the idea was any trading done in this period while the market was sorting itself out was to keep position sizings small. I suggest we still need to do that, and it's okay not to be in a market. Being in cash is a position, and that's fine as well. So even though you don't trade this market, of course it reflects back through into the other markets as well. So this would be the same for the S&P 500 as well. So this can be a large fourth wave here, covering the May period as well. The other side that we've been looking at through here is we've been looking down for wave 1, wave 2 to come back here, for it to fail at the 1350, because they'll both take the same track. A new low under here would sort of help a lot for the picture to the downside, but would in this little picture down here would be looking for 5 waves down here, but this would be the 3rd, the 4th, and the 5th here. So it can take out this low here, because it's a possible larger triangle pattern. So, but anyway, in terms of trading, expect this to come down to 1330 here. Expect to bounce back up, can come back up to the 40, to the 47 or 48 in 3 waves, and this is where we start to look at it. If we get a nice clean 5 waves coming up here, then we've got a bullish pattern. If it comes up in 3 waves through here, then we know we've got a bearish pattern. So we will know in this space over here in due course. So just going to take a little while to do Monday, Tuesday, possibly Wednesday, for this to reveal itself a little bit further, and that would be the same for the FTSE as well. The FTSE yesterday here, we were looking for, well, we had a clear 5 waves down here, the 1, the 2, the 3, the 4, and the 5. So we knew that this would be coming back up, and we were watching this pattern come back up through here. We figured this was a part of an ABC pattern coming back up here, but from this low here, we were looking at 1, 2, 3, 4, looking for a 5th to have a quick reversal at the 6,000. The idea was to look for short trade setups back down to 5.9. Now this is going to be the same again here. So what we're looking at here is down for 1, little ABC for 2, all the 3rd wave down here, and the 4th wave here, a 5th wave here to spike that low out there perhaps, and then looking for an A and a B and a C back up to here. So be patient, allow that to come down through here, allow this to come back up, short trade, scalp, whatever, but looking for 5 waves down, 3 waves back up, and it may just stick around the 5.9 here, I'm not too sure, but 50-60% retracement level. The pattern will be more important, and it will probably be a smaller version of this here, but as you can see, the retracement levels are quite high, so we can expect that again through here. Once that's complete here, then we can look for further downside here. but this is what we need to line this up with the Dow. The European markets can be same as our local markets as well. There's a synergy there that needs to be accommodated, and our local markets starting with the cash market here. Now, as you know, that I was looking for this to be the larger pattern to be an ABC down for wave 2 here, but we're looking at 5 waves down now for wave 2, so we'll be sort of looking over here somewhere. The other 5 waves here would be the 5 waves down to this point, the ABC back here for wave 2. This would be the 3rd wave down, the 4th coming in here, and the 5th coming down through here. So we're still looking for the low to come into place at the 61.8 retracement level, and the same on the futures as well here. So all I could do here is I understood the pattern that we had coming through here, so we knew that we would be coming down, but just didn't know sort of how far that would be coming down through here. So now we need to consider this as a 5-wave structure in terms of down for 1, the A, B, C for 2 here, down for 3, A, B, C for 4 here, and down for 5 to come down a bit lower here. So because of this correction here of this A, B, C here in 3 waves, so if we've got a downtrend here and we get this ABC here, then we know straight away it's a corrective pattern and more downside will follow that, and that's what will occur there. It can come straight down here, but also this A, B, C here can also be just an A wave where we get a B wave here and a C wave back up here and then down. But because of the size of this here in proportion to the move that's had down here, then this is fine the way it stands. And the drivers as well. Gold is still sticking to the 1500, so keeping a positive note there. But I did want to point out that the bearish side to this here is having 5 waves down to this point here, 3 waves back up, retesting the 1500, and then this structure here giving us this 5 waves here. This is a real possibility. That's if the retest here fails. So under the 1472 would suit that there. The crude market here, we were also looking at, just bringing the bigger picture here. So the bigger picture is we've had 5 waves down through here, 3 waves back up for wave 2, and then we've had another 5 waves down through here. Then we've had this ABC back here for the next wave 2 here. And now we're looking down for 1, back for 2, down for 3 here. So we're basically just trying to figure out if the price is going to lock under 100, and we'll get our next 5-wave structure to the downside through here. So I can say though that yes, it is retesting the 100 now, so it can fail from here in line with the wave count that we have. But the reality is that it hasn't actually rejected. It's in the process of it, but it hasn't given us evidence of the rejection so far. So, but it is lining up. So we'll see once the 98 becomes resistance here, we'll see this market at 95, and we'll look for a larger 5-wave structure down in terms of a wave 3 from here. So wave 2 here, a wave 3 coming down. The wave 3 would hold 5 waves of 1, 2, 3 coming down, 4 and 5. So in this 3rd wave that we've got here, of wave 2 here, would be looking for that 3rd wave to come down through here. So basically we've got wave 1, wave 2, and then we've got wave 1, wave 2, wave 1, wave 2. So wave 3, so it's a third of a third of a third. So it can move down quite quickly from here. That's the point there, but allow it to find the first minor level under the 100 there as resistance, and then you'd have a nice short trade to the downside, which if that was the case, then we can look at our energy sector and all the constituents within that to look to short. The copper market's pretty much doing what we thought it would be doing. So in essence, we've got this, so this blue line down here is wave 3. We're looking for the blue line here to have wave 4 here. 38.2 retracement level back to the fourth wave of 1 lesser degree. As I mentioned here, that the 400 is a medium trading level, and also wave 4s as well. They can get rather complicated, so that's what we're sort of expecting to see within this range here. So from the 380 or the 390 in this range here, in this range here, expect it to be choppy across here. So it's going to be very difficult to navigate through that. So just give it some time and space there. But the material sector is sort of governed by this. So looking at BHP, while this wave 4 here is going on through here, we'll see a bit of support in the material sector, and also BHP, but you need to take in the ADRs with the BHP as well. So New York desk was down on BHP, so we'll see that. Haven't seen a support come in there just yet, but we're hoping that it will. But first of all, BHP will bring our market down, the XJO down a notch, as the Dow will come down on the Monday as well to finish those lows there. So basically sort of summing up a little bit on the sort of drivers and the indices, that that we've got a little bit further to come down to check support again, and we need to see if that support holds. If it does, fine, then we push up. If not, then we'll be looking at new lows coming in, and we'll be trading on that downside there. Now, on the currencies, one of the drivers, of course, for the situation is the US dollar index, which is pushing up strongly. And we've been watching it come up. We've got this nice 3-wave counter trend through here. So when you get a 3-wave pattern like that in an uptrend, you know that it's corrective and new highs will be made above there, and that's what's occurring here. So we're looking at this move up here, 5 waves to come up through here, which would be the 1, the 2 to here, 5 waves in the 3rd wave to here. This will be the 4th wave unfolding through here. It'll find support on this old high over here in subgroup 2 here, and then push high for the 5th wave, the first high above the level. And then the A, the B, and the C correction will unfold, and then it will push up from there. So at a level, we'll call this the classic trading levels pattern, and that means that you've got your arrival, your reaction, your support, the first high above the level, then the correction starts, the A, the B, and the C. This correction here is basically to balance out this previous 5-wave impulse wave here of 5 waves, and the A, the B, and the C make it 8 waves. So we've got 5 waves, 8 wave, which is a motive wave, and then we'll look for support on here and push up. Now, this, of course, would be the inverse to the euro and also the Australian dollar, and the other currencies, the Swissy, and that would be in line with this market and the Canadian as well. So yeah. So looking at the inverse of this, and just noting this 5-wave structure here, and then the ABC. So we'll be seeing that in the opposite. So when we're looking at the Australian dollar as well, in the bigger picture up here, got down for wave 1, back for wave 2, down for wave 1, back for wave 2 that we're looking at, and now we're looking at 5 waves coming down through here. So just a moment ago we were looking at the 5 waves. So we're looking at 1, 2, 3, 4, and 5, and then we would look at an A and a B and a C in reverse of this. So once this 5 waves is complete down to here, we'll see an A, B, and C back, and then we'll see it continue to the downside, and that would be the same for the euro as well, in terms of what it's doing as well. So we've got the bigger pattern here of down for 1, back for 2, then down for 1, the A, the B, and the C that we're looking for yesterday for wave 2, that's into play, and then we're looking at a 5-wave structure to the downside here. So this 5-wave structure here, if I got it on the 2-minute chart here, okay, so we're just looking at this 5 waves here. So we've got 1, 2, 3. This is the wave 4 happening here, and a wave 5 will come down through here. So once we've got that, then we'll see a retracement of an A and a B and a C back up for wave 2. So that's just like the euro, that the DXY that we're looking at, but upside down. Okay, so this here would be looking for a 5th wave up here, where the euro would have that to the downside, making a new low, then the A, the B, and the C across here, and then up. So that's what we're looking for on the euro there. So one more look at that. So 1, 2, 3, 4, 5, and then A, B, and C across the 141 here. Probably not coming back up that much because it's quite shallow, and then down from there. So essentially 5 waves down to this point, an A and a B and a C back up to here, and then down again. Okay, so that's that. Alrighty, that sort of sums it up. We're not in a terrific place to understand the bigger picture just yet. We're still, the XJO here, just sort of recapping, we're still looking for this to come into play here. So we're looking at the 5 waves down like that and the 3 waves back up like that here. So that's what we're going to be looking for this week. The flip side to this, on the Dow Jones, it will be sort of paying very close attention to, would be looking for a larger pattern to the downside here. So we'll be looking at a move like this that can come into play here. But we have to play this out here because otherwise we get trapped here. So we can trade in the smaller sub-levels of and minor levels of things, but we need to get this clear here. And I know that it's been dragging on, but there's not much I can do about that. But we just have to figure this out here, and that's our job for early to mid next week there. So, okay, good morning and good luck.